If you've been watching the stock market lately, you've probably felt it, right? That tension? Well, it turns out there are two massive events right around the corner that could finally snap that tension and maybe, just maybe, spark a huge rally. We're going to break down exactly what they are and why they matter so much. Let's dive in.
So, this brings us to the central puzzle. I mean, on one hand, you have almost every Wall Street expert saying they're bullish on the year. But on the other hand, the market itself is acting, well, incredibly nervous. There's this huge disconnect between what the experts are saying and what the market is actually doing. So what in the world is going on?
And this slide just lays out that contradiction perfectly. Look at the bullish case on the left. It looks amazing. We're expecting rate cuts, AI spending is through the roof, the Fed is sounding more friendly, and inflation is dropping. But then, you look at the nervous reality on the right. Defensive, safe stocks are leading. The exciting stuff like small caps and tech are lagging. Even the famous Santa Claus rally was a bit of a dud. The market is clearly bracing for impact. The question is, what's it bracing for?
Okay, to figure this out, we really need to pop the hood on the market. Let's start by decoding these mixed signals and try to find the real source of all this anxiety.
You know, at first glance, you'd think everything is fine. The CNN Fear and Greed Index is sitting right at 51. I mean, that's about as neutral as you can get. But trust me, that number is incredibly deceiving. It's like an average that's completely hiding some really extreme emotions pulling in opposite directions just under the surface.
And here is where we see those hidden extremes. When you break the index down, just look at that options market component. It is screaming extreme fear. That tells us that the big institutions, the big money, they're actively buying protection. They're hedging. But at the exact same time, junk bond demand is showing extreme greed. It's a market that's totally torn in two. And that fear in the options market, that's our big clue.
So you have to ask, why are they hedging? Well, hedging is what the big players do when there's a major uncertain event on the horizon. They want to protect their portfolios from some kind of negative surprise. And right now, it turns out there isn't just one, but two huge events that are causing all this nervousness.
The first, and arguably the biggest source of all this uncertainty, is a huge Supreme Court ruling on tariffs that has Wall Street basically holding its breath.
So what this all comes down to is a legal decision that could invalidate certain tariffs. And if that happens, it might force the government to refund billions of dollars to companies. The financial stakes are massive, and the total uncertainty around what's going to happen has basically paralyzed the market.
This sets up a classic sell the rumor, buy the news situation. Right now, we are deep in steps 1 and 2. Uncertainty is super high, so investors are hedging like crazy. But the moment that ruling comes out, and this is key, regardless of the outcome, the uncertainty just vanishes. The theory is, once that clarity is restored, those hedges come off, investors rush back in, and that could trigger a very, very sharp rally.
Now, nobody has a crystal ball, but the speculation is that this won't be a simple yes or no ruling. It's much more likely that tariffs on industries that are vital to national security, things like food, healthcare, semiconductors, those will probably stay. But tariffs on everyday consumer goods like clothing and furniture, those could be removed. The main point here is that the market's fear of the unknown is probably way worse than what the actual outcome will be.
Okay, so on top of the whole tariff situation, there's a second massive catalyst coming up, the next CPI inflation report. And this could be the rocket fuel that really accelerates any rally after that ruling.
The official forecast is for inflation to go up by about 0.2% to 0.3% for the month. But, and this is where it gets interesting, the source we're looking at believes there's a very good chance it comes in even lower than that. A surprise to the downside would be a huge green light for the market, signaling that interest rate cuts are definitely coming, and that would be extremely bullish for stocks.
And look, this isn't just wishful thinking. It's based on some solid data. For one, oil prices have dropped, and that lowers costs for just about everything. We're also finally seeing housing inflation start to cool off. And, importantly, that big wave of goods inflation everyone was so worried about, it just hasn't really happened. All the signs are pointing to a very market-friendly report.
All right, now let's bring in a pro to help put all this into context. The source material for this explainer leaned heavily on insights from the well-known strategist Tom Lee of FundaTech.
When it comes to the tariff ruling, Tom Lee's take is both simple and really powerful. He believes that no matter what the court decides, it basically puts a ceiling on tariffs. They're not going to get worse, and they might even get better. Just removing that worst-case what-if scenario from the table is, by itself, a net positive for the market.
And get this, here's a fascinating little detail that shows you how confident some folks are.
Apparently, some investment firms are already buying up potential tariff refund claims from other companies for like 30 cents on the dollar. That's a huge signal that the smart money is already placing its bets on a positive outcome.
And looking beyond these next couple of weeks, Tom Lee also points out that the fundamental picture for the year ahead is really healthy. He's seeing earnings quality improve, driven by actual revenue growth. That strong foundation is the real reason so many experts were bullish in the first place.
So, let's tie this all together. Here's the potential 1-2 punch. First, the Supreme Court rules on tariffs. That giant cloud of uncertainty lifts, all those institutional hedges get unwound, and the market rallies. Then, right on its heels, the CPI report comes in low, confirming that inflation is behaving, which just adds more fuel to that fire. The combination of those two things could be incredibly powerful.
And that brings us to the final big question. The market has been held back for months by this fear of the unknown. With these two massive clouds of uncertainty about to clear, the stage is finally set. Are we about to see the market unleash all that bullish potential that so many experts have been predicting? The rumor is almost over, and the news is about to arrive. We're all going to find out very, very soon.